Good morning, everybody. This is Ed Carter with Trader Vision 2020, and this is the Friday, June 22nd, 2018 blog account performance update. Okay, so in the blog account, in the past week, we've made some gains. Thursday was a pretty rough day. We dropped back a little bit, but we're still up 23.54.45 from our beginning balance. Let's call that 3 weeks. We've got about 12% of the account in trades. Only 3 trades remain open. We've had a couple trades that didn't execute, which we will talk about in a little while. Of those 10 trades, we've won 60%, or 6 of them, and we're averaging a little over 5% per trade. So we're keeping on track. I'd like to do a little bit better, but it is what it is. Our 3 open trades are GIS, or General Mills, KHC, Kraft Heinz, and OMI, Owens Minor. Owens Minor, yeah, that's right. You can see that we have small gains in 2 of them. General Mills is up 50 bucks. It just won't get going. And we're up 45 bucks in Owens Minor. Kraft just hasn't got off the mark, but it's only been in place for a day now. One thing to keep in mind is note that Trader Vision is telling you here that General Mills reports next week, I think on the 27th. So keep that in mind. If it doesn't get together and start moving Friday or Monday, we will close it Monday regardless, a couple days before earnings. I think it reports Wednesday. So that's where we're at. Let's look at the trades that have closed. Well, I guess the first thing is let's look at 2 trades that have not executed. So a few days ago we had SDOW. This was the day that we had the trade. It was the featured trade idea. While it started off, the bears just couldn't find traction and they fell back after the gap higher. The next day the bulls gapped it down, but then the bears brought it back up. And today, Thursday, there was follow through with the bears finally finding some traction, getting back up above the 50. So in this trade, I've moved the entry and stop prices over. If this trade has follow through in the morning, if the futures are down, I would take this trade on Friday, even if, as planned, if it does execute, it finally comes back on Friday, because nothing fundamentally has changed since the day we recommended that. So again, we're looking for a little 10% gain, making our goal and sticking an extra 60 bucks in the bank on top of that, getting almost 3 to 1. If we can get that follow through, got, you know, $128 risk, so that's a very small risk, and I think that that would be a pretty decent trade if the bears are in charge. On the other hand, EPC did not execute on Thursday. Let's look at that chart. EPC did not execute on Thursday. You can see we did not make our entry price. We've got this inverted head and shoulders. We've got the rounded bottom breakout. We have broken the downtrend. We're now in an uptrend. We've got a J hook in progress, or a pullback opportunity, whichever you prefer to call it at this point. And we've got this resistance level that is holding, but we're in the bottom of this pullback, and there's nothing fundamentally wrong with this. We stayed in the box. We stayed in the trading range. We did not fall out of bed on today's bad market day. So if it executes on Friday, if we do get a rally up to break out of the J hook, I would take this trade on Friday as planned. Nothing has changed fundamentally. So again, the same plan that I have outlined for you here a couple days ago, or yesterday I guess it was. We're looking for overall about 11%, 540 bucks, risking 105 to get that. That's well worth taking that shot. So let's look at some of the trades that have closed. I've looked at the 3 open positions, the 2 that have yet to execute, and I see no reason to throw them away at this point. But let's look at the trades that have closed in the last week. So let's start with Haynesbrand. Haynesbrand was a nice runner. We entered here, and it continued up. We kept moving the stop up. We made our first target, and on this day we got stopped out. Very bad day. Look at the size of that candle relative to the other trades, the other candles in that chart, and you can see that was an extremely bad day. 4.25%, 4.27% down day, and that took out our stop. So that's okay. We got stopped out well to the green, and after taking part of the trade off. So looking at that trade plan, we had in fact taken 100 shares off, and booked our 8.43%, I guess, wherever the heck that was. Here. And the rest was on, but we got stopped out here. That last part of this the trade got stopped out here, not too far below the first target. So overall, 8.25%, $390. We did make our goal for the trade, and an additional $70. So that's a win. The next trade that closed down on us was GPro or GoPro. And I think this one stopped out the second or third day of the trade. Let's bring it up here. So we entered at 6.25. We did not make it anywhere near the target, and we were almost immediately stopped out. We had moved our stop up after this nice entry day, so we lost less than we would have, but we ended up with 13-cent loss, and that comes out to $78, or 2%, and chalk that one up to experience. I don't think that we would put our stop any looser. Even if we had left it down here the next day, it would have been stopped out. So we were just as well off to be stopped up here and save ourselves whatever that was, 3%. So continuing to manage risk is always a good thing. Then on the 15th, CDNA completed for us. Let's look at the CDNA trade. We entered, I guess, probably right in here. No, there it is. We entered on this candle. It ran up nicely, took out our first target, continued on up. We kept raising our stop, and we were completed the trade here. I know some of the people in the trading room thought it was continued to be a nice trade and wanted to stay in it. I'm glad that we took it off at this point, because as you can see, it waffled for a second. The next day, it would have stopped us out anyway, with giving up all that gain, and it has continued down since. So it's just as well that we stuck to the plan, booked our entire $866, almost 20% on the trade, and that's a nice winner for a short time frame. The next chart is DDD, and let's see the DDD chart. DDD, we entered the trade back here. It ran up smartly. We were able to book our first target on the trade. It traded sideways on this day. The market, pre-markets, the Dow was down 400 points, gap down 400 points, and I was nervous as this thing opened and then started down immediately. I entered, and I actually violated the plan and exited the trade just a touch below our goal. So our target was 14.25. I ended up exiting the second half of the trade at 14.23, and it continued down, but then it reversed up. So it would have stuck around and kept us in, but then we would have had to live through Thursday's big bearish engulfing candle, and hard to say what happens on Friday. So for now, I'm happy to have booked the profits that I did while we could. We locked in $312, not quite, but very close to our goal of 320, and almost an 8% win. And we took off some variability at that time. GTN was closed today, Thursday, and let's look at that chart. So GTN started out and ran up nicely, took out that first target, and then today's big bearish harami stopped us out as we had moved the stop up. So on this trade, we were able to book that first target, took off 200 shares at that target, which was $250 basically, and then we were stopped out at a gain, but still not achieving our target on that second portion. So we only booked almost 4.8% on that second, 150 shares, let's call it. And that gave us 333. So we were able to achieve our goal, and that's the job of a trader. 8%, we achieved our goal for the trade, and that's what we wanted. You know, we would prefer to have hit the home run, but we'll take those singles and doubles. So that's an account update on the trades that are existing, the 3 trades that are open, 2 trades that did not execute that we may execute on Friday if the market reacts either bullishly or bearishly, to make one of those work, either SDOW or EPC. With that in mind, and again, we're doing okay. We've made 2.4% on the account in 3 weeks, and that's not too bad. It's not stellar, but it's not too bad. And we've done that with a very small investment, only 12% of the account, 1 trade per day maximum, and some trades don't execute. So you can see that being disciplined and keeping to the plan, planning ahead of time, taking the emotion out of the trades, has been very effective for us, and I anticipate that it will continue to be. So again, thank you for your time. You have a great Friday and weekend, and I hope to see you in the trading room.